We were promised a recession, but time is nearly running out as we near the end of quarter one in 2022. I say time's running out because we need 2 consecutive quarters of negative GDP growth. So that's what a technical recession is. And if we don't get that in 2022, then it doesn't look like we get this recession. So why is it so important that we get a recession? Well, in my opinion, and if you've subscribed to the channel by clicking down here and the bell notification icon and the like button, you know that I don't think we are going to get a recession in 2022. However, the news and the media tends to tell us otherwise at this point in time. There's obviously inflation and money printing, wars going on, stock markets falling. How can this not happen? Let's take a look in the charts today and also look at the rejection on Bitcoin and how this is flowing through into a small short-term crypto altcoin season. Thanks very much for liking and subscribing to the channel, and of course stopping me in the streets to say thank you for the content that I'm putting out. Let's crack on with the video. First up, quick shout out to the sponsors of this channel, SwiftX, the best cryptocurrency exchange in Australia. You can buy, sell, and stake your cryptos on SwiftX. Plenty of new coins coming out as well. As we just saw over the weekend, ApeCoin getting listed as soon as the rest of the market got it as well. So check out the link in the description to SwiftX for $10 of free Bitcoin when you use the link down below. And also Bybit. You've got 11 days left of the $4,000 Ethereum giveaway. 4 lucky winners will win $1,000 of Ethereum each using that link down below. It's exclusive to this channel as well. So go and check out Bybit link down below, and you can use them internationally. They are no KYC exchange. All right, back to the recession that we were all promised by the doomsdayers on the social medias. 2 consecutive quarters of negative growth in real GDP. That's what a recession is. Now, we can see the markets have bounced back pretty strongly leading into the weekly close. The S&P 500 here nearly reached its 50% level. Now, I've got noise because I think pretty much anything that's going on between whichever low comes in, say in the first half of 2022, maybe the first 3 quarters, we're just basically going to be bouncing backwards and forwards, and that's going to cause noise. And of course, media, like myself here on the channel, also need to make content as well that actually hits algorithms. Now, I enjoy making content. I love reviewing my charts daily basis, checking everything that's going on. But if it's not hitting any sort of algorithm with specific search trends that people are looking for, then no one's going to see it. And so that's why I put noise here, because essentially what is being promoted to a lot of people through this period, the first quarter, second quarter, I'd even maybe say the third quarter, we'll have to wait and see. But I think this is going to be a lot of news in the media about this. And it's important to stay focused on what the macro view is doing, the big picture goals, whatever your long-term investment plans are, because this can essentially just be wiped out in the later years, and you'll miss out on fantastic opportunities because during this period, this seemed like the absolute worst time to be buying. Remember, just a few weeks ago, the 24th of February is when Russia invaded Ukraine. Now, you can see the low here is right here. That's the major low. And since that point, we've only been up from there. Same thing goes for the Dow Jones. You can see the low, same sort of time when Russia invaded Ukraine. And now we've closed above the 50% level. So that's in the stronger half of this tool. It's above here, getting closer to 35,000 points. The NASDAQ is the weaker out of the 3 US indices, but that's to be expected as well as technologies outpace the rest of the market in the first half of the major cycle that we're following here on the channel. So make sure you're subscribed and like the content so you can see this pop up. But the major cycle here, looking at the 18.6 year cycle, which commenced around 2010 to 2012 and is due to expire sometime later in the 2020s. Looking at this stage around 2026. It could be a little earlier, could be a little later, but we'll know as we get closer to that point. The main thing here is that a lot of the information and the news and the noise that's coming out at the moment is seeming to be just that. It just seems to be noise at this point in time. Even the NASDAQ has closed above its 50% level of this shorter term time frame. So this is all leading to pretty good news and some good buy the dip opportunities for longer term investments in the stock market and at this point potentially in real estate as well. Now, of course, that doesn't mean that things are going to get easier for everyday people. Stuff in the supermarkets and the shops, everything is getting more expensive. We can see inflation here, and we're using a website called shadowstats.com to look at how inflation is calculated using the data or how they used to calculate it back in the 80s, which shows that the real inflation today is somewhere more around 16% compared to what we're being told, which is getting close towards 8%. So that's using the stats of the 1980s. If we use the stats of the 1990s and how they measure inflation back in the 1990s, we can see that inflation is somewhere around 11 or 12%. So it's this blue line here that's now off the chart. And the red line is the official consumer price index. So that's somewhere at around getting close to 8%, which we know from the Fed meeting last week. So either way you look at it, it's above what we're being told at the moment. So things are still getting more expensive, but that just means it's down to you and I to be investing our money a little more wisely and understanding that prices are going to continue to go up. And it seems like at this point, assets are continuing to increase as well, even though we're getting a slight slowdown. Remember, we are looking at macro timeframes here, and there are always going to be corrections in the macro cycle. Speaking of the macro cycle, if you want to join us and our members in the Investor Accelerator, check out the link in the top of the description. For Patreon, every Monday morning we go live with our members, a weekly group call. So that's going to be in less than 24 hours. Link is in the top of the description. Let's take a look at Bitcoin now. As it approaches another price point, another resistance level, potentially getting rejected, but it did get rejected on the dominance chart. So Bitcoin BTC dominance, obviously the market caps here, all of the money going into crypto, where we were hopeful that Bitcoin would get above 50% and start to close above, and then obviously more money get coming through into Bitcoin. But that has now slowed for the time being, and Bitcoin has been rejected at 50%, which means the money is not flowing into Bitcoin at the moment, and it seems to be flowing into other major assets like Ethereum. So taking a look at Ethereum, it's broken above its 50% level. So the short term, the longer term 50% level as well, and it's bounced off the major 50% here at $2,400 to $2,500. So that's a good sign for Ethereum in the short term. It's finally broken the downtrend, and quite decisively as well. So we have moved away from that angle, that speed of the decline that was happening in ETH. And now we're heading back towards around $3,000 to come up and test some of these higher levels again. So that's a good sign for ETH holders and altcoins in general. $3,000 would be the level to get above, consolidate, and then start to move our way back towards 3,300. And then we've got the next couple of levels at 34 and 35. So almost every $100 after $3,000 is or has some sort of resistance when we look back left on the chart to show us our support and resistance. So it's not going to be an easy move back up above 3,500, but once ETH does get above 3,500 and consolidate, I can see that as being a much stronger position for ETH and the rest of the altcoins. But for now, we're seeing some of the gains and some of the positivity flowing out into other cryptos, stuff that has been on a major decline since September. So over 6 months now for the likes of ADA. Cardano has finally moved up again. It's put in a low around 80 cents. It peaked at this low, or dumped on the 24th of Feb, which was the Russia-Ukraine invasion. And that price was 74 cents. We found a low here at 80 cents. It took some time, and now it's finally starting to trend back up to test this downtrend. So this downtrend has been in play for many, many months now. I've had this on the chart and just been following this to see when ADA could eventually come back to it and hopefully break the downtrend, which would then slow the bleed to the downside. Now, it's not saying that 74 cents is the final low, but it just means that we may be in a slower decline for a period of time before we reach a final low. But previous to that, ADA has just been falling and falling and falling without finding too much support. DOT had been in a similar position as well. So I'm looking at these short-term moves up. It had a peak out in November, so a little bit later than ADA, and it's starting to break above 50%. So I'm still not convinced that this is a low, because when we look at what's happened on the moves up, you can see that these are short moves up. So we're just getting rejections after every 1 to 2 days. We're not really getting a long flow of many days up. So you can see from the low, we're getting high, 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 and then a rejection. Then another day, another 2 days, and then a rejection. We're getting 1, 2, 3, and then a rejection. So you got the day here. So you got a low, higher low, higher low, higher low, 3 days, rejection. A low, and then we get the next day, one up, rejection. Whereas when we look back in the move from July up into November, you can see that there's a longer flow of days up. So this is what you want to see to bring in some sort of support to the thesis that the market could be going into a longer term alt season. So I do think we're seeing a little bit of a pop off, or at least a relief rally. The chart's telling us that at the moment we're actually seeing prices start to move up with some higher lows forming as well. But when you look back at a stronger alt season, you see many days up without too many lower lows. So just going back to the low in July, 1, 2, 3, 4, just a few cents lower there, just 3 cents lower. So we had 4 days up, a few cents lower, and then another day here. So then we go up again, 1, 2, 3, 4, 5 days up, and then a rejection. This was a higher low, 2, 3, 4 days. So you're getting more strings of 3, 4, 5, sometimes even 6 days before you're getting a rejection. Whereas like we saw now, what we're seeing is 1, 2, maybe 3 days up before we see a 1 or 2 day reversal. So things are still quite slow at the moment for this alt season, but nonetheless, we're still getting some alts giving us a relief rally and some good potential trading opportunities. And back to Bitcoin, 42,500 seems to be the level that has plagued us again. It was the 9th of March, the last time we tested this level, which was the change of behavior bar where we crashed on the 4th of March. So we need to get back above that level and start to close above it. 43 is a good level, but apart from that, this has been the level that has plagued Bitcoin for many months now, 46,000, which was previous support back in December. Before we had another change of behavior and crashed through and then into our final low here in January. So a move above 43, that could bring some more strength back to Bitcoin and away from altcoins. And then I like the look of this attempting to break back above 46, and that might give the altcoins the resting period while Bitcoin goes on the run, but then brings all of the strength back to the market so that we can have some more trading opportunities in altcoins where Bitcoin will be sitting in a stronger or a more comfortable position if it can be above 46 for a period of time. Don't forget to check out the links in the description for our sponsors of SwiftX, $10 of free Bitcoin over there. Set yourself up before the next bull market. There's plenty of altcoins to be trading here on a great Aussie exchange. And then also internationally, and Aussies can use Bybit as well. It's a no KYC exchange. And there's a lot of trading that you can do over on Bybit and also staking as well. As for the markets, the recession seems like it's going to be put on hold for a little while longer, especially with the stock market getting back above some resistance levels on the S&P and the Dow Jones being above 50% levels. So if we don't get a negative GDP next quarter, that's quarter 2, then it's possible that we won't get a recession in 2022. I'm still of the belief that we won't, and I think this is just another good opportunity year to be setting our longer term positions for what's to come in this second half of the bull market. Let me know in the comments your thoughts. Are we going to get the recession in 2022, or is it looking likely that it's not going to happen? Like, subscribe. I'll see you guys at the next video. Until then, have more fun to get more done.